Streaming from Oklahoma's own digital studio, this is Dave Davis with Your Money Matters.
Hello, everybody, and welcome back to another edition of our digital desk here today. We're talking about the One Big Beautiful Bill. We're going to refer to it as OBBB. It is, of course, no longer a bill. It has now been signed into law, but we're going to refer to it for simplicity's sake as the One Big Beautiful Bill. An almost 900-page now law, mostly having to do with taxes. And that's what we're going to be focusing on today with a local tax attorney. She's actually head of tax law at Exemplar Law. Her name is Ashlee Hall, and she's joining us today to talk about some of the tax implications specifically for small businesses, both employers and employees, and some big businesses, because we know that there are a lot of people involved in small businesses across this country and in Oklahoma specifically. Ashlee, good morning.
Good morning. Thank you for having me.
Yeah, thank you for being on. This is so important. And when we're breaking down a almost 900-page document, essentially, we're kind of doing bite-sized pieces here. I did some other stuff earlier about different aspects of it with a different expert, and today I wanted to bring you in. Tell me, Ashlee, kind of what you do, and then also about tax-splaining, your brand there.
Yeah, absolutely. I am a tax attorney. I've been an attorney for 18 years and a tax attorney for the last 12. I am a tax controversy practitioner, so I help taxpayers and business owners with all kinds of IRS and state tax disputes, assist with proactive tax planning, and I love to dig into new areas of legislation just like this one. So I'm very excited to be here and kind of dig into some of the more exciting provisions of it, hopefully. And then tax planning, I'm glad you asked. It's actually a podcast that I have with a fellow tax attorney, Mary Lundstedt, and we primarily have that on YouTube. And feel free to follow us if you want tax updates with kind of a different flair. We kind of try to make it interesting for our followers, and it's really become a tax practitioner community, primarily on LinkedIn, that we really try to hold the IRS accountable and point out when taxpayer rights are being violated, things like that a lot of practitioners don't necessarily highlight. So it's fun.
That's really interesting. So one more time, people can find that. It's called tax-splaining.
Tax-splaining, yeah. So
tax-splaining.
It's commonly, some people can't find us because they put an S in there after tax. So it's tax, T-A-X, planing, like explaining. Yeah. But just replace the EX with tax.
Yeah, I get it. I know, but you have to just spell it out because, sometimes it's like tax-splaining. Yeah, that's very clever. And you and Mary release regular episodes, and I know you've covered such a broad topic, just in being over a decade now of a tax attorney. How big of a deal is the OBBB and this bill and the new tax ramifications? Like, if you were doing like a 1 to 10 scale and all the tax stuff that you've done as a tax attorney, how big of a deal and a big of a change is this?
I would say it's close to a 10. I mean, it's as groundbreaking, and it's as important as the Tax Cuts and Jobs Act, which, as you know, was passed at the end of 2017, went into effect beginning of 2018. And at that time, that just really kind of rocked the world of tax practitioners and small business owners. It actually created a ton of new opportunity for tax credits and incentives for small businesses specifically. And so this bill, as you've probably read or heard, extends a lot of those provisions from that same bill. But it is going to take some time for us to digest it. And, with the TCJA, it took us years to get guidance on some of those provisions from the IRS and how the statute was going to be interpreted. So just because we have this law that's been passed doesn't mean we fully understand all of it and all of the nuances. So it's definitely going to be an interesting time for tax practitioners.
And it's interesting because as I've talked with other experts on this program about the OBBB, we've gone over the child and tax dependent credits and things like that. And that's not what we're here to talk about today. Today, I really wanted to focus on small business because I thought you had a lot of interesting things to say, you and Mary, Ashlee, about small businesses, both good and bad, because whether you're a small business owner or you're employed by a small business, there's a lot in here. And I wanted to start with one of the other big headlines that I really haven't dived deep with an expert yet. Overtime tax and tax on tips. Tell me about that. Is it really that I don't have to pay taxes on my tips anymore if I'm like a waiter?
That's a great question. And so, one, I want to point out the final version of the bill actually includes other professions outside of restaurants. So, we think of wait staff traditionally when we think of tips, but think about your barber, hairdresser, other professions. The bill actually, the Senate version had some language that expanded this provision to those other service type industries that traditionally receive tips. Now, there are some anti-abuse rules in there, and so some might put on their creative hat and say, well, I'm just going to reclassify everything as a tip from my wages, and there are some provisions in there that are, and I'm sure we'll get guidance on that to prevent that. But at the same time, it is very exciting for those individuals. There is a cap on it. It's not all of your tips, but it's up to a certain amount. And then there are some income phase outs that are pretty high, honestly. And so I think for the vast majority of those individuals that receive income from tips, it's going to make a huge difference.
So generally, people should still keep track of their tips for tax purposes, or not necessarily? What should you do on the user end if you're a waiter out here and you're like, well, do I have to keep track of it still or no?
Well, and it could change things in different ways. That's a great question, and there's somewhat of a layered answer. I'll try to keep it brief, but I know that there are individuals out there that maybe don't even realize you're supposed to report your tips on your income. Let's say it's cash. Technically, you are supposed to report all income that you receive when you go to file that tax return. And so if you aren't accustomed to tracking it or retaining those records and including that on your tax return, in order to get this deduction, you are going to have to report it. And then it's an income tax deduction specifically. So it doesn't impact the payroll or the employment taxes. It affects your income tax deduction. And so that's how it's reported, would be on your tax return. That's how they're going to have to get it, essentially, to get the benefit.
And we've covered the part, and you mentioned this earlier, I thought this was really interesting. So there are guardrails in place with the law where you can't just say, well, my whole income's tips and I'm reclassifying and I'm just going to kind of rig the system where I'm getting all tips. Like, there's supposed to be guardrails, right, to prevent people from doing that?
Right. And, typically I tell clients, I have clients come up with all kinds of creative ideas they want to bounce off of me just because I'm a tax attorney. And I always tell them, think about it in terms of if you're audited, how this is going to look or how you're going to explain it. As an attorney that handles tax audits, that's sort of how I'm always evaluating any piece of advice that I give. Is how is this going to look in an audit? Does it look like you acted in good faith? Was it an honest mistake or whatever? Or maybe there's a legitimate reason for reclassifying those wages, which could be something that a tax practitioner could help with establishing, something for the employer, for example. Maybe they are doing something radically different in other ways that can be justified outside of simply getting the tax savings. That's kind of key with any tax strategy. Passing the smell test, as they say, is, did you do this solely for the tax benefit, or were there other legitimate business, reasons for making that change?
So the next thing I wanted to talk about was tax on overtime. So what does this mean for the common person who works overtime?
Yeah, there are some similarities with these provisions between the tax on tips provision and the tax on overtime. There is a limitation, so it's not going to be, 100% of your overtime necessarily. Honestly, this bill is so massive that I'm still kind of digging into it. So I hope to kind of hit the high points. and make sure that employees understand that they're still going to have to report it. Employers are going to have some additional reporting requirements in the form of how they prepare their W-2s, that go out to their employees after the end of the year so that they can report their income on their tax return. And so it's going to have to be reported a specific way. So it's going to add a little bit of an administrative burden, hopefully not too much of a burden. But I do think it is going to be a very beneficial provision, especially for those individuals who are receiving that overtime pay. And I have a feeling employers are going to see their employees probably want to take on more overtime and overtime shifts because of that significant. Not only is the pay higher, usually it's 1.5 times what you normally make, but then now add on the tax benefits. I think overtime is suddenly going to be popular.
Yeah, up to $25,000 is what we're thinking. Like you said, we're still going through, but up to $25,000 of overtime exempt. That's kind of like if we did the bullet points, that might be one of them there on overtime without all the specifics.
Right. Right.
So that's significant and something, like you said, that you still have to keep track of. And I want to hit on this point again because a lot of people, trying to do the right thing, trying to do their taxes the right way, don't want to cheat on their taxes. They want to do it the right way. You have to still report the income. Even if some of it's going to be tax exempt, it's really important, it seems like from what you're saying here, to still report all the income that you made properly.
Absolutely. And where, as a tax attorney, I see that coming into play on the back end potentially and with enforcement, is when you have differing opinions maybe between the employee and the employer as to whether and how this income should be reported. There could be discrepancies in what's ultimately reported to the IRS. And so you want to make sure that, whatever you're reporting to the IRS matches what your employer reported and vice versa. So I foresee probably some additional audits come from this because a lot of the IRS triggers for audit are looking at what was reported versus what you reported on your tax return. And if there's a discrepancy, that's an audit flag. So there's going to need to be some coordination, I believe, between the employee and the employer to make sure everything's reported properly. And there may be a few hiccups with implementing those administrative changes and things that I mentioned. And so, I would encourage employers in these service tip based industries, or even with the overtime rule, to consult, whoever handles their payroll, HR, all of that. All of this plays in. It's not just a tax provision. It's, you want to look at the whole picture.
Yeah, that's really interesting. And one of the reasons I love this digital format, the digital streaming desk here, is we can go really in depth on this and just kind of keep hammering on some really important points. And I think for how many taxpayers there are in America, how many people earn tips in overtime, how many Oklahomans are in this boat, all of this information just really, really, really critical, because it doesn't matter who you are. You just don't want to get audited. And if you do, you want to make sure everything is all there together. So I really appreciate this. Ashlee, this has been wonderful, but we're going to continue with the small business side, specifically for employers. There is something in the OBBB, the One Big Beautiful Bill, as we've been calling it, the Employee Retention Credit, and there's a big change with ERC. So tell me about your take on ERC, and good, bad for businesses. What is the future of this, and what is it?
That is quite the loaded question, which you probably don't even realize. But I could go on about this topic for hours that we don't have. So I'll try to
Let's
keep
start
it
with
brief.
what is the ERC? Let's just start off,
I'll
what
start
are we
with
talking
what
about
it
here?
is. Yeah, absolutely. So I've been embedded in the Employee Retention Credit since it was passed as part of the CARES Act in March of 2020. And I've helped taxpayers claim over $800 million in these credits. So I'm very familiar with this provision, how it impacts small businesses. The ERC was created by Congress as an effort to reward business owners for keeping employees on the payroll despite the hardships of the pandemic. So when you had government orders shutting down or causing the business owner to modify operations in order to stay open, things like that that they were required to do, the employer followed those requirements, did what they were supposed to do, kept employees employed, then they get a tax credit essentially. Or if they received, or if their gross receipts, their income declined by a specific amount, they could qualify. And so it's been a great benefit for business, not just small businesses, but initially it was really geared towards the larger corporations in America. And that's because of some of the interaction with the PPP loan in the original law. And then about a year, and I'm mentioning this for a reason, the timeline is important with where we are now. But the original law was not necessarily small business friendly. And in fact, a lot of small businesses didn't even know they were eligible until at least a year after the CARES Act had passed. And so, still middle of a pandemic, trying to keep the business afloat. And then they get word that, hey, there's this complex tax credit that may result in, the credit itself is significant. And so for 2021, it's up to $10,000 per employee per quarter. And so that can be very significant, as you can imagine.
So with the ERC, what are the changes? Because you mentioned, okay, so it started in 2020, then the PPE happened, or the PPP happened, and so we're trying to figure out, okay, are businesses using this money right? Are they retaining the employees? Are they doing the right things to keep employees, during the pandemic? And so now, how has that evolved now 5 years after the CARE Act, specifically with the new OBBB? What's this new version of this employee retention credit?
A couple of things. The first important piece is that it cuts it off retroactively to January 31st of 2024. Now, this is a credit that pertains to payroll taxes for 2020 and 2021, but employers had until April 15th of this year to claim, I'm sorry, employers had, more time essentially beyond January 31st of 2024 to claim it. And so what this does is something that I don't recall ever having been done, at least since I've been a tax practitioner, is it cuts off a benefit retroactively that some business owners may have claimed after January 31st of 2024. And that at the time that was a timely claim. And then now either they've received the funds and the IRS could potentially claw them back, or they haven't received the funds and now they're not essentially going to receive the funds. Now, this only applies to certain quarters of ERC, and so it's an important distinction. There was some changes between the House and the Senate versions that modified that. But for certain quarters of ERC that an employer claimed, if that claim came in after January 31st of 2024, even though it was timely at the time because they had until April 15th of 2024 to claim it, they're retroactively cutting it off.
Wow.
Which, again, I've not heard of that. And I think there could be bigger, potentially constitutional ramifications. I feel like it's going to be something that will be litigated. I kind of hope it will. But yeah, that's the really important takeaway for business owners that are still waiting on funds or maybe recently received them, but they had filed after January 31st of 2024. They're going to want to, consult their CPA or tax attorney or whoever helped file that for them.
So, and let me just see if I'm getting this right. So if a business owner was like, I was already approved for this, or I thought it was already coming and now it's been cut off, like that could theoretically happen where someone was actually or believed to be already approved and now it's like, nope.
Yeah, and think about what on the employer side, they had to do in order to qualify for the credit and be eligible is they had to make those government ordered modifications or they had to shut their business down. They had to follow those orders and keep the doors open in order to be eligible for the credit. They did their part years ago with the promise by the government that they would be entitled to this credit. And now the government has taken it back for some. So it's really an
Oh, go
unfortunate
ahead.
situation.
No, yeah,
I
go
was
ahead.
just going to
Finish,
say it's
Ashlee.
really unfortunate. Yeah, it's really unfortunate for small business owners, especially, um, in industries. I mean, I've claimed these for home health care, senior living, restaurants. Think about retail. It runs the gamut. Chiropractors, dentists. I mean, there's not an industry in America that was not impacted by COVID in some way, and it goes across all industries. So this is not just industry specific. And you could have one way this change puts some business owners at a disadvantage is, let's say you own a business and you're not going to get your credit, but your competitor got their credit. They're benefiting from that. I mean, it's just really making the playing field unlevel, in my opinion.
And certainly something that, as you mentioned, you could see some future litigation. Like I said, I mean, the bill was passed in both chambers. The president signed it, but you could see some future litigation stemming from this bill.
Yeah, I believe so based on the conversations I've had with other attorneys that there likely will be something litigated with respect to this. So we'll have to keep an eye on that. And tax planning, of course, will be reporting on it.
Yeah, you and Mary tax planning, you can check that out on YouTube. So we just have a couple minutes left, but overall, Ashlee, I just wanted to ask you, at the end of the day, for employees, good, bad, overall with the OBBB, tax-wise, how do you think this shakes out overall for employees? Mostly good or mostly more challenging?
I would say mostly good. I know there's a lot of opinion out there and things on social media about policy in the bill. Obviously, that's not part of this conversation, but I think there's a silver lining here, at least with the tax provisions, that there are some really good provisions in here that can help individuals and help employees get ahead. There are also some excellent business credits and incentives, restoration of 100% bonus depreciation, all kinds of things that incentivize manufacturing, for example, and other credits. And so I think overall it's good all around if you're just looking at it, trying to look at it impartially as a benefit to the taxpayer, essentially. I think it's very pro taxpayer aside from the ERC provisions.
Well, Ashlee Hall with Exemplar Law, the head of tax law at Exemplar Law. Ashlee, thank you very much. And you can catch Ashlee and Mary on Tax Planning on YouTube, where they go in depth with a lot of great topics. Ashlee, thank you so much for your time today. I appreciate it.
Thank you so much.
So this has been another, I think, really great conversation here about your finances, because at the end of the day, we're talking about employers, we're talking about small businesses, but we're talking about you. And that's what we want to do with this digital streaming desk over the coming weeks and months. We have had several, whether it be on AI, whether it be on utility bills. We cover all kinds of topics, and topics that we can't just fit into a 5-minute news interview. We do it right here on the digital streaming desk on newson6.com, on the News on 6 YouTube channel, on Facebook, on my Facebook account, and I post these as well. So again, that was Ashlee Hall with Exemplar Law. We thank her so much for the time. And for more on this, you can always that's the great thing. Once we post it, YouTube, once we post it on newson6.com, you can zip through the different parts. On our web article, we usually will break it down into certain sections so you can read what really applies to you. But with this big tax bill that is now into law, there's going to be a lot that applies to you. So just always be careful. Always consult a tax professional if you have any questions, especially someone, even just if you're doing individual income, always just make sure that you're doing the right thing. So we thank you so much for Ashlee, and we thank you for joining us here at News on 6 on the digital streaming desk. I'm Dave Davis, and we will see you next time.
Thank you for watching this Oklahoma's own digital studio stream. Stay with News on 6 online and on television anytime for the latest news, weather, and sports.